Good morning, Australia. It's evening here in Boston. We've got Neel in New York, and looks like we've got a good cohort there in Australia. So welcome all. Look, my name's Scott Hayes. I'm from First Contact Advisory. I'm delighted to bring this and present and sponsor tonight here Boston Australia Daytime event. It's the Funders and Founders event, which is quite topical. For my background, I have over 25 years financial service experience. I've worked and lived in Sydney, London, Dublin, Wagga, and even Melbourne. So there you go. But last year I moved to Boston with my family, and from that I've developed a pretty good professional network. And on the back of this, I've set up a company called First Contact Advisory, and that is to help out Australian companies, particularly facilitate their growth options and also funding options into America. America is quite different from Australia. My experience as a corporate banker, predominantly in Australia, is that there is no early stage venture capital or funding options for companies that are fast growing, particularly in the tech space. Australia by nature is very conservative. No one really wants to back you unless you've got a 10-year track record, you've got profitability. So that goes all against any tech client or biotech or any fast growing company that's just looking to scale up. I recognize that that's the issue, whereas America is quite different. It's a big, deep, liquid market. There's a lot of different players, there's different niches, and people specifically focus on a certain area or a certain sector of the market. What venture capital is available in Australia is predominantly in the $50 to $100 million investment range. And I just saw a stat recently during COVID that anything below $1 million is virtually non-existent. So with that, I will hand over to Adrian Mendoza from Mendoza Ventures. He specifically focuses on companies in the AI, fintech, and cybersecurity space, especially around the sub $1 million capital area of investment. And I'll hand over to you, Adrian.
Hi guys, thank you for having me. Scott and Barry, thank you for putting this together. Excited to talk a little bit about what we do. I think I have a couple of slides that I can pop in. So let me see if I can share my screen for a second. And here you go, guys. I think that'll help talk a little bit about us in a better light. And I think we'll, there you go. Let me see if I can present. Here you go. Let me know if you guys see that. Again, our firm is Mendoza Ventures. We started in 2016. Both myself and my partner are here on this call, and I'll break out into the funder side. My partner Jennifer will break out into the founder side, and we're also joined by guest star Neel Ganu from Australia as well, who is one of our portfolio companies. You can see he's right over here. So I didn't put in an embarrassing photo. You know, a little bit different about us is we're based in Boston. We invest in 3 verticals, but what's unique about us is that we are location agnostic. The portfolio, we've got 6 portfolio companies. We're on Fund 2, starting to raise Fund 3, but we are agnostic in what we look for. A little bit about us, just is that, again, not just in the 3 verticals, but we are very unique than venture, is that we're looking for targets for early acquisition, very much like in a private equity approach. We also view venture as an ability of something that's more actively managed. You know, talk to our founders like Neel in terms of how active we are, even to the point that I think we've talked to Neel 3 times today. But the other important thing is that we invest in companies that we have deep industry expertise. A lot of times for companies like Finch, we come in very early or we come in, later. But we focus very much early on in our second fund on early stage companies. And I could talk more about the distinction of what these verticals are, especially in the US, as venture is very much a staged approach. And I can talk more in detail about what that looks like. We've deployed $3.5 million in our fund. We've got 6 portfolio companies, 12 co-investors across 3 different countries, which is Canada, which is the US and England, as well as about, I think total our companies have raised about $13 million. I think that's even like a low and out of date. And we partner a lot with firms in different countries, everyone from Rising Tide in Silicon Valley to Barclays Bank to Breakaway Growth in Silicon Valley and Luge Capital and Inovia in Canada, as well as a few even other German firms as well. What's unique about us is that we also create, we activate our base of limited partners, of investors in our fund, to do everything from advising our portfolio companies to making introductions. And this is a very much different model than traditional venture, which is a black box. So I can happy to talk more about this, of what this means from a limited partner perspective, what the expectation of a limited partner is once you invest in a fund, and then how startups gain access to them or even get value add from them. So that's, again, my Mendoza Ventures in a few slides, and I'm happy to talk more in the breakout room.
That's great. Thank you, Adrian. That's a good snapshot of Mendoza Ventures and the goals that you guys kick. I'd like to introduce Neel now. Neel is actually, a Melbourne boy, came to America, lives the dreams, had a fintech startup. He's scaling up like crazy, and recently he's successfully raised US 1.8 million. But he's got to feed the machine, so he's looking for more funds as he goes bigger and better. But I'll hand over to Neel, who's one of Melbourne's own.
Thanks, Scott. I really appreciate it. And Scott and Barry, hey, thanks so much for giving me the opportunity to be here. Couple of things. It's very nice to present back and hear the Australian accents, which I do very much miss being here in New York. Happy to talk about my background. Happy to give you guys kind of more of an insight. So I grew up in Melbourne. Came to the States now about 4 years ago. My last gig in Melbourne, I actually worked at National Australia Bank, and coincidentally, so did Scott. So I was on the founding team of NAB Ventures before I came to Boston to go to business school. Kind of while I was there, look, I have a background in financial services. I really enjoy fintech. I think it's where the market is going. I have a passion for it, and kind of around that, had this idea. It was called Trio, which we've now kind of taken, grown, packaged, and we're launching to the market as Finch. I've got a couple of slides as well. I may as well share my screen if you guys can see that. So in a nutshell, what we're building is we're building Finch. I'm the founder of Finch. We have a team of 6 based in the US. We have a team of 8 that's in Bangalore. We're really changing how people manage their money, and that's the mission that we're on. And the reason why we're doing this really is from a personal standpoint. When I looked at how I manage my money, I'm a finance professional. I've spent a ton of time helping other people invest, and when it came to managing my own money for that longest time, I didn't know where to start, and I never optimized my wealth. Now, the old saying, a mechanic's car is the worst maintained, was very much true. But from that side, looking outside of kind of my peer group, this is an incredibly big problem, and much larger in the States, and kind of than I felt it was at home. And we actually started doing a lot of research on this, into how people manage their money, where people are investing in, and how people are putting their money to work. And the results were truly shocking. And that's exactly what that innovative product that Finch kind of creates really helps solve. So we're out there. Our purpose is really to empower people to put their money to work, and take those steps to achieve financial freedom. And how do we start doing that? And what we do is we add simplicity. We actually take out a lot of the friction when it comes to investing, and we make that really simple. So what Finch is Finch is a productive everyday account that really lets people put their money to work, gives them the benefits of investing and the flexibility of checking. And by putting those two together, it means that really people can start getting those returns. People can start making the most of their money without actually significantly changing their behavior from how they spend their money today. So we give you a digital account straight on your phone. As you open that, we ask information about you. We understand your risk profile. As you deposit, we then deploy that into a portfolio recommended for you. That money is put to work from day one. And then we really push the envelope by making it liquid. So we give you a debit card. You can go to Starbucks, or you can go buy a coffee. And as you're swiping your card, you get your coffee, and you've just paid for that fractionally with commission-free kind of exchange traded funds and parts of your portfolio. and you can actually use that money the exact same way you would with an everyday bank account. And by doing that, we really let you unlock those benefits. So it's really that seamless kind of all-in-one account. We give you simple investing. We really make it personal for you. And the biggest benefit and our differentiator in the market is letting you access that money at any time. More on the company, more on the story. So the company was founded out of MIT in 2018, August 2018. I quit my job at Fidelity in 2019. We've grown that now, and we were incredibly lucky to first meet Mendoza. I met Pong, who's actually not on the call, who's another partner at Mendoza Ventures, who I speak to probably far too often. But Pong kind of introduced me to Mendoza and what they provide. And it's truly what Adrian mentioned. It actually goes far beyond capital. In this process of raising capital in the States and actually knowing what that capital environment was like in Australia, it is really different. Part of it comes down to personality, to risk tolerance of the American market. The stereotype is true compared to what you hear or what you would have seen in Australia. But it's really finding that right partner, the right partner that resonates, that buys buys the vision and buys the long-term kind of view of the company, which is exactly what I found in Mendoza and kind of all of their partners in our entire team. And we've been incredibly lucky to have their support. So capital, yes, that's the flashy part that makes the news, but it's really that support. It's really, being there at all times that really matters. And that's a true differentiator in the market. Having that experience with VC in Australia, it's kind of more of a traditional capital model, but I do think there's a huge opportunity there as that market matures. So I'm happy to talk about kind of all of this, the process of raising, what people look for, and all of the above in the breakout groups.
That's great, Neel. That's a good summation, and I'm sure there's a lot of questions in the breakout room with the founders. So be prepared, I'd say.
Scott, just before we go into the breakout rooms, we've got a few folk missing this morning, and that'll be their loss over the course of the day. I did have a few questions that had come in advance from folk whose diaries had changed, so they'll be listening back to the recording and desperately hoping they get their question put up. So I'll be nice. A question to both Neel and to Adrian. It was around that active investor proposition. There was a real uncertainty in terms of that journey. So Neel, from your point of view, having someone who not only is investing in the business but is sticking the head under the bonnet and being a bit hands-on, how have you found that? And from Adrian's point of view, when you talk to a company, how do you filter out those who just want your cash but don't want your input? Neel, you're first up.
Yeah, happy to give that perspective. So the actual, happy to talk about the depth of that engagement beyond just the capital. So Pong and the team and Sen as well are hands-on in the fact that they at times join operational calls. They're really that trusted coach and advisor, which is very difficult to find kind of out in the market. If you're looking for this expertise, you'd be looking for some very, very senior folk who have done this before, and you're probably not going to recruit them, you're probably not going to find them, and you're probably not going to be able to afford them. So in that sense, steering us in the right direction, from an acquisition standpoint, from a technology standpoint, the team, and it's not just the team, it's who the team has access to. If there's a problem that that we're facing, they would know someone who's faced this before, in a first-hand capacity. And it ranges from kind of the three of them, being one-on-one with me, one with our team, with strategic decisions, whether it's hiring, whether it's development, or acquisition, down to the fact where, so we're raising, we raised our equity round. Our business model has a balance sheet component in that, and working with a few banks through that due diligence process now, to the sense that one of their kind of limited partners actually joins those calls in an active process and, guides us through that process Why? Because he spent his career in warehouse lending and he's done this before, and he understands the kind of nuances there. So it goes a lot deeper, and that support, I was definitely surprised. Like I did not suspect it, but I've actually started leaning into that more, and Adrian and Sen can talk into that, into how that works. But it actually, it almost adds kind of guardrails, and it adds that experience as we're going through this process, going through it for the very first time myself.
Yeah, I could jump in a little bit here. So a little bit about the background about Jennifer and I is we were entrepreneurs before we went into VC. So we have trailed the roads that Neel has trailed before, from raising money to everything you can possibly do in a startup. And one of the things that we saw was that the capital was easy to get. It was the expertise that was really, really difficult. And in spaces like fintech and AI and cybersecurity, access to individuals that understand risk and compliance and how money moves around is really, really important. I have an interesting story. We had one of our limited partners, as Finch was doing their RIA application last year. I reached out to the network and said, hey, has anyone done an RIA application? And out came a little limited partner. He was in New York and said, I'm happy to go up to Finch's office and give them 2 hours. And I think it accelerated their application in 3 weeks. Like, they just breezed through it. And having been, have raised venture capital before, I had investors that had no idea how technology worked, that we would have to explain the simple minutia, as well as some that were really helpful and some that were completely passive. So when we looked at that model, we took the best of both worlds. We took, what the angels would do, which is very hands-on, to what venture would do, which is very structured, and put them together in a model that was a lot more about transparency and being active, because the typical venture, investor is a passive investor. They write a check, they walk away, and hopefully in 10 to 15 years, if you're lucky, you see them, and if not, you see them in a board meeting, then they come back. But having learned from that model, we wanted to make sure that the best success was to help Neel, his team, and our other portfolio companies, really succeed. If they succeed, we succeed, and vice versa. And what's also different from our model is where a typical fund of our size would make 30 to 40 investments, we're only going to do 15.
Scott, you're not off the hook. Probably one of the highest risk questions came directed to you.
Awesome.
The taxation system for an investor in Australia versus in the US, which is more favorable and why?
Just from my personal experience and what I know, I probably have to say the US, there's probably more concessions and breaks if you know what you're doing. But yeah, the Australian system's more geared for negative gearing into property than to invest in fast startup businesses with, R&D tax concessions or other concessions that you can write off against your investment so your capital can come out tax free. But I know Adrian's all across his question, so maybe I'll defer to Adrian.
Yeah, absolutely. One of the things that's happened in the last 5 to 8 years is there's been an entire wave of programs focused on creating innovation for both the founder and the funder. On the founder side, there's programs like certain states, I know West Virginia has one, Maine has one, where investors are able to invest and get 50% of their capital back, which is tremendous because, we invested in a portfolio company in Maine, 50% of our capital came back in cash. Win-win, goes back to our limited partners. From the funder side, it's a huge opportunity to be able to take less riskier and riskier bets. And, from a statewide, it promotes innovation and companies to move there. From the founder side, there's things like what's referred to as QSBC, the Qualified Small Business Tax Credit, which is there to incentivize founders like Neel or even early angel investors to pretty much have no capital gains on up to $10 million for early stage investments and early stage, contribution into equity. So therefore, Neel, when he sells Finch, will not pay taxes on $10 million, which is really fantastic because it really promotes the founders in the US to go ahead and build something, and also for early stage co-investment and of angels and funds to be able to participate. It won't work on everything, like funds can't participate on that, but angel investments and co-investments directly into Finch can. So it's a huge opportunity to take advantage of programs like that.
Welcome back, everyone. I think we're nearly all back. If anyone's out there in the ether, we'll try and let them back in again. Jennifer, how did you go in the founders room? Any highlights to report?
They were great questions. It's a great group of founders. And you guys feel free to email me anything that we didn't get to cover, because there were a lot of questions in there. But I think the highlight was hearing Neel talk about everything he's achieved in the last year and a half, because it's been a marathon and he's crushed it. So hearing him talk about that from a point of confidence was a personal highlight. I'm a proud funder right now.
All righty. Scotty, how do you guys go in the money room?
The founders room was good. Everyone there was a few questions directed mainly towards Adrian and his experience, AI, fintech, and also questions around liquidity with Neel's Finch. So Adrian covered for that pretty well. But yeah, it's, I suppose, probably an opportunity if someone's got a burning question from either room for the other side, maybe if they can just jot it down and we can ask the powers to be. Yeah,
that'd be a good option. And as if by magic, here we are. Scott is our link between the funders and the founders. He's our link between Australia and the US. So for anyone who wasn't in Scott's room, you might want to just screen grab this so that you can drop him a note directly.
That'd be great.
Enjoy the rest of your day, everyone in Australia. And for those of you joining us from Boston, thanks for allowing us to be part of your evening.